Mortgage prison, and I'm not going to tell you, one of the two people on the screen at the moment didn't actually know what mortgage prison is. So stay tuned. We're going to talk about it. It's a real thing, and in the property market where we're talking to buyers, we're having this conversation. So stay tuned.
I'm a prisoner in my black and white.
You know what? It's an ugly topic. I was watching last night the Treasurer on Four Corners and talking about housing and affordability, and there was a crowd of a couple hundred people asking the most sensitive, awkward, scary questions of the Treasurer about our housing market, population, not being able to pay mortgages and stuff. This is tough. This is a tough gig.
It's tough. It's like when you're like drowning. Help. First home buyer. Yeah. Prison.
Now, Billy, first of all, guys, we're just going to explain exactly what a mortgage prisoner is, and you've got one on the screen right now. But we're going to talk about exactly what it is, because there are a couple of ways that people can be prisoned into a mortgage. It is serious because it can leave people with serious amounts of debt for the rest of their life if not handled properly. And by the way, this is not financial advice, but we're just talking about what we're seeing in the hood around the northern beaches, the type of conversations we're having with people and with brokers and stuff like that. Now, Billy, your understanding of mortgage prison, break it down.
Well, my initial response to you this morning when you asked was it's just someone that is effectively trapped in their mortgage because the change in value or equity in their property has sort of gone below, it's gone negative a certain percent. And so once that happens, you can't technically refinance and get out of that situation. Makes changing borrowers really tricky. But you were saying it sort of goes a little bit beyond that as well.
It does. And I think if people when people are understanding loans, and I sat down for an hour and a half with some school friends last night, and they were talking about their ability to purchase something. Beautiful couple, childhood sweethearts, 50 years of age now, and they're going, you know what, we've just got to buy something as first home buyers. And we're explaining the minefield of lending. Now, in lending, there's and in mortgage prisons, and that's what we're talking about today, you've got to qualify two ways with a bank. One way you've got to qualify is with your income, and the other way you've got to qualify is with your deposit or equity or stake in the deal. So the bank will happily advance 80% of a loan every day of the week, providing you've got the income to support. Now, at the moment, people are in a mortgage prison where they qualified with income and they qualified with a deposit. So they had their 5, 10, 20% in the property, and they really had the ability to go to any bank and finance with any bank. Now, things have changed with property values, and some people are no longer have that capacity to refinance because the value in their property is diminished, and the deposit in their property is almost gone, has diminished with that. They'll take your deposit first, the banks. So they're in prison. Second to that, even if they do have enough equity, if they're a different example, the way banks are assessing loans these days on income is much harder. Don't forget they're assessing at 2% rates with a 3 or 4% buffer. Now they're assessing at 5% rates with a 3 or 4% buffer. So people aren't making the cut. People aren't eligible because of the they're making the same money, if not more money, but to qualify for that same loan on an income capacity, they don't, and they don't qualify with the amount of deposit or equity they've got in that property. So that then puts people into, without even knowing, a mortgage prison. That then means if they want to refinance, that any bank that they're talking to is just going like that.
Yeah, it's tricky. There was an article that came out just talking about NAB customers, and 1 in 5 customers are in a mortgage prison, which is, it's a big number. They released something just saying they've recorded a 17% increase in cash profits to 4.07 billion in its 6 months result to the end of March, and that was sort of just driven by the interest rate increases. So this, banks are starting to recoup some of that money they've lent out, but it's talking about that buffer changing from a 3% to like a 6% buffer, as you said, and I thought this was an interesting one. 2 in 5 customers who borrowed between August 2019 and July last year, when rates were at their lowest, are now in a mortgage prison. There you go.
So this mortgage prison is interesting, and I guess there's 2 ways to get out of mortgage prison, guys. And again, I'm not a financial advisor. I'm just thinking laterally, and I'm listening to what people are saying that I'm talking to. Fight or flight. So flight is,
You gotta fight. You gotta fight the banks.
Which is what you're doing, Bill. Yeah.
Yeah. Well, I'm a prisoner. I'm not on death row, but I'm fighting.
So, what does fighting look like? I guess fighting looks like you're chasing income, you're consolidating debts, and I think you can fight. There's only so much inwards you can go with cost saving. It can be quite stressful. But at the same time, if you're moving out, say that again.
I've got another one. Sorry, I didn't mean to cut you off. I just got excited about this one. If you're not happy with the rate, and given that there's been 11 consecutive rate rises, the banks have been building in their profit margins just a little bit, consecutively every time it goes up. So you can actually just make a call to your broker, who will put in a phone call on your behalf, just saying customer's not happy with the rate. They know there's better rates in the marketplace if you're a long-standing customer and you haven't had your finance. If you haven't had your loan looked at in the last 6 months, chances are there's a saving to be made. That's what I was told by a broker. So just get on the phone and ask for a sharper rate.
Okay, can I suggest something to everyone that's watching? There's the problem with mortgage prison is it erodes your pride.
That's true.
So when everything is rosy and you do genuinely have the option to go to another bank, you will quite confidently ring your bank and say that you're going to burn the bridge. Say that, mate, I'm out of here if you don't give me a better rate. When people are in mortgage prison, they generally have lost a little bit of confidence, and they're like, no, I don't even want to rock the boat that I'm in. Now, for banks to turn around and say, for you to say I want a better rate, for the banks to turn around and say we don't want to bank you anymore is very rare. Just so everyone knows. But just if you're dealing with a good broker, they can actually have that discussion on your behalf with the bank as well for you, which will probably help your confidence a little bit. But I can understand in mortgage prison, there's also a mental side of it as well. It's not just the physical dollar making side of it. There's managing the mental stress of going through that as well. And I was watching Four Corners last night when the treasurer was talking, and there was a gentleman from the western suburbs, and he was talking about how hard he's had to work since the mortgages changes. He's come off a mortgage of 2-something%, and he's now paying 5.2%. And he's running 2 jobs full time. His wife's running 4 jobs, and they're paying childcare of $370 odd a week. So I think it's that time a little bit now. I remember my parents distinctly, my mum having 3 jobs where she would do Woolies during the day, 40 hours. She would do Woolies night fill at night, which was she'd come home, cook, and then from 7 o'clock to 11 o'clock she'd do night fill. And then I remember she was cutting hair on weekends with 3 jobs there. So I think that's that fight mode that we're talking about, Billy, that you're in at the moment, where you're in a mortgage prison. You don't have the ability to refinance. And let's face it, if you did have the ability to refinance, Billy, the savings are still going to be aren't really going to touch the sides, are they? Even if you went and got a better rate, how good's your rate going to get?
Yeah, you might land yourself a cashback incentive, but ultimately, if there was a lender in the marketplace, giving 2% interest rate, lending away, everyone would be with them. It'd be like asking the real estate agent to find you a house that's worth $1 million for 500,000. So it's just the way you manage it. But it's some good advice, and I think it's particularly important just to talk to a broker, because there are ideas out there that you can sort of implement and try, but you don't actually need to change anything. It's just making a phone call. You don't need to go and earn more money. It's just asking the question.
It is. It may be a sequence of a couple of all of those things, but I do have to say, do not go into a shell. Do not go under a rock. Communicate with friends and family and people of influence in your life. And they will help you in that path, because the odds are you're going to meet someone that's in that same situation that's going to be your wingman, or you're going to have people that have been there, done that, and are going to give you great advice. The worst thing is to take it upon yourself. Don't share it. Get depressed. What's Sheetal saying?
Do you think there will be more rate rising coming?
No.
I reckon maybe.
What about you?
One more, 2.25.
Yeah. You know what? I had a meeting. I conducted a one-on-one interview with the CBA chief economist, biggest bank in Australia, pretty influential person with his eyes across pretty good data, has been pretty right in what he's been saying the whole way along in his predictions. In January, Lisa and I sat with him. He said he believes we will see 2 further rate rises. He believes that towards the end of the year he'll see that the rate rises pulling back a little bit. And the head of RP Data, the biggest data company for property in Australia, also had the same view independently as well. So I reckon there's a bit of pressure there. They don't forget, it does take 3 months for a rate, the full effect of a rate increase to come through. So we still haven't had the full effect of the first increase this year, and we still haven't had the full effect of the last increase. It's probably going to be more like July or August after we've felt both of those effects coming through. May, June, July, August before we feel it. So I think it would, for the government to put it up now, I don't know, don't think so. What else we got?
Check it. Yeah, I reckon this is just a must at the moment, unless you're on a fixed term. Even still, I think it's just healthy to check in, and it's a constant. There you go. That's the show.
That's the show. And do you like my heading today, man with feelings?
Yeah, I did. I appreciate that.
The reason I did that is I thought, hey, guys never talk about it, eh?
It's true, hey. Yeah.
Just a good old, how you feel? How you feeling today? Really?
Yeah. And I didn't actually realize I was a prisoner, but you know what? We're just working. It's a work in progress. You said I'm not a prisoner because I could sell one of my kids, and I said, well, I don't have any kids, so I'm guilty. Guilty is charged.
Look, I'm going to leave off on this. A famous person once said, what's his name? Ching Ching, what is his name? Chinese guy. He said, perception is the art of war. Perception is the art of war. So guys and girls, with the mortgage that you currently have, it is your choice if you regard it as prison or if you regard it as heaven. It's your perception. So make it a positive thing, and let's double down, work hard, and get through it.
That's it. Have a good day, guys. We lost you, Mark. I'll roll the outro. Have a good day, guys, and yeah, tune in tomorrow. We've got Michael Sillage back coming on air, so he may be back in place for tomorrow, back on a Wednesday. Have a good day.